So, we were talking about the all-clear system, and basically the all-clear system gives you the opportunity to understand what accounts increase on the debit side and what accounts do not. And so the last set of the all-clear system that we were explaining was on the clear side, particularly capital. And so we said that capital is just another word for equity. So that would be either your common stock or your retained earnings. Those particular accounts is a part of capital. So the L would stand for liability. Liabilities. The L would stand for liabilities. And we know what our liabilities accounts are. Our liabilities accounts are our account payables, note payables, salary payables, anything with a payable at the end, right? And so last but not least, our R would stand for our revenues. And so that makes up the all-clear system. All, assets, withdrawals, expenses, withdrawals being dividends, and clear, capital, liabilities, and revenues, equity being capital. Now, what's the whole deal with these guys? Consider them to be gains, right? They just can't stand each other. All two different political parties. One says tomato, the other one says tomato. The grass is green, the grass is orange, right? They always go against each other. So you have these all guys who believe in one thing, where the clear guys believe in something totally opposite. And so pretty much from here, we're downhill. And so before we go into there, just understand, if I'm talking about assets and I'm talking about land, furniture, supplies, they're part of what group? The all group. What if I'm talking about revenues? What part of the groups are they from? The clear group. What if I'm talking about accounts payable? Clear group, right? What if I'm talking about common stock? Clear group. What if I'm talking about dividends? All group. And so you just have to keep in mind of all of those things. And so what you need to know now is that any account that's in the all group, they always increase on the left side. They always increase by debit. Always increase by debit. Everything else is logically downhill. Because if they increase by a debit, you know they have to decrease by a credit. And we already said that these guys are inversely related, meaning that they pretty much don't agree with each other. And so the clear group will always increase by a what? A credit. And we know that since the clear group increases by a credit, they're going to decrease by a debit. They're going to decrease by a debit. So you pretty much have the all group who increases by a debit and the clear group who increases by a credit. Okay? So quick 1 minute quiz. If I want to increase cash, what should I do? Debit cash or credit cash? What side would it increase on? Cash is an asset, so cash needs to be debited because assets increase by a debit. If I wanted to increase common stock, how would I increase common stock? Common stock is a part of paid-in capital, which is a part of stockholders' equity, which is a part of the clear group. So I'm going to increase that by a credit. If I wanted to increase accounts payable, how would I increase that? Well, accounts payable is a what? Liability, and liabilities increase on the credit side. So I would credit accounts payable. How would I increase rent expense? If I want to increase rent expense is an expense. Last name is an expense. And so expenses are part of the all group. And so if I want to increase rent expense, I would debit it. But if I wanted to decrease land, how would I do that? Well, land is a part of an asset. And assets need to be decreased by credit because assets are all a part of the R group. So normally what I tell the students is memorize this, write it on your homework, write it on your test, and it will tell you which does what, which account does what. How would I want to decrease account payable? Account payables are what? Liability, last name payable. Account payables belong on what part of the category? The clear group. So we're going to decrease accounts payable by debit. And so this is pretty much your system that you can use to know what accounts to increase on what side and what accounts to decrease on what side. And it's pretty straightforward at that. At this level, the only thing that will give some of you guys problems is not knowing the categories that accounts belong in. At this level, if you don't know what is cash, or you don't know what is accounts payable, or you don't know what's revenue, or you don't know what's rent expense, what categories do they fall into, then you're going to have a lot of problems in this chapter. Which means that you didn't pay enough time or pay enough attention in chapter 1. So you definitely right now watching this, if you don't know what account is a part of which group, stop this, go back to chapter 1 and tighten up.